Hello everyone. So welcome to my YouTube channel. So today I'm going to go through tips for beginners in terms of investing, my experience in terms of investing, and my overall journey in terms of investing in stocks and mutual funds as well. So firstly, in terms of platforms, so obviously here I'm using Hargreaves Lansdown, and so yeah, this is a really, to me, a really reliable platform. Obviously, there's other platforms such as AJ Bell and Charles Stanley, but I prefer Hargreaves Lansdown, even though the fees are a lot higher. There tends to be there's a really good mobile app essentially, and really good website experience, and I've had really good support, and my customer experience with Hargreaves Lansdown has been really good. Yeah, I'm not affiliated in any way, but yeah, to me, Hargreaves Lansdown, the customer experience is excellent, so that's why I use them essentially. So as I mentioned, there's other platforms such as AJ Bell and Charles Stanley. You're more than welcome to research which fees you prefer and which customer experience or user experience that you prefer in the apps as well. So in terms of my experience and journey, I've been investing for about 5 years now. So first started off with a mixture of funds and stocks, went to stocks and then came back to mutual funds. I personally prefer mutual funds. They to me they tend to be a bit more safer, less risk involved, and you don't need to spend too much time constantly obsessing about individual stocks, how they're performing, etc. Kind of just almost for a lazy investor in a way. So, what is a mutual fund? So, obviously, a stock is a part of an individual company. A mutual fund is a collection of stocks or individual stocks from different companies, all bundled up into one portfolio. And so essentially, when you buy essentially a slice of a mutual fund, you're buying a collection of the different companies that the mutual fund is invested in. So, for example, if I buy one slice of a mutual fund, it could be a portfolio of, say, Amazon, Apple, Nvidia, etc. So you're lowering your risk in a sense because you're no longer buying individual stocks, you're buying a collection at one time. So now it comes to my actual portfolio. So you can see here the total value is at almost 30,000 British pounds. So this is in a stocks and shares ISA, and this has mostly been from my income from my previous line of work. And so you can see it's very well laid out in Hargreaves Lansdown. So you have the stock or the units held, the value, the cost, and the gains and loss. So you can see it's a variety of gains and losses, but you can see on average it tends to be less than 20%, probably on average about 10% in terms of gains. So you can see the average here is about 12%, and my total gains as well. So this has been in there for about a year now, the majority of this portfolio. So 12% over years to me seems quite reasonable, depending on the value amount that you put in. But you can see here, majority of my portfolio is mutual funds. This SMT, Scottish Mortgage Investment Trust, is an ETF, but the majority are mutual funds. And so you'll notice also the majority are technology funds. So you're more than welcome to choose whatever mutual funds you want. There's everything from technology to energy to food, etc. But for me personally, I enjoy investing in technology funds and the future in terms of technology. So that's what I enjoy investing in. So how I pick mutual funds is firstly criteria, mostly technology. And so if we go to the Hargreaves Lansdown page for a particular mutual fund, so in this case it's Franklin Technology. This is a mutual fund I'm invested in. And so normally the first things I look at is the charges and the costs. So there's obviously a charge and a cost to using Hargreaves Lansdown, but also the mutual fund that you invest in. So usually from Hargreaves Lansdown for mutual funds, it's usually a free dealing charge. However, from the actual mutual fund and the company itself, there would be an ongoing charge. So this tends to be around 1% in my experience. The more expensive ones tend to be close to 2% or even over 2%, but you're looking at around 1% for that charge from the mutual fund. So that's the first thing I would look at. So next is the performance overall. Although performance is not an indicator of future performance, I do like to see a growing trend with the portfolio or mutual funds that I'm invested in. So you can see that this particular mutual funds, it's gradually increasing, but obviously the big downturn there, but generally increasing in terms of its performance there. You can also look at the charts and performance here. You can also see the general trend here, and you can filter by exactly how you want to see the data by as well. So it's all really useful information from Hargreaves. Next, I would look at the holdings as well. So this is really important to look at because you're essentially investing in a mutual fund and you want to look at what the majority of the pie is for that mutual fund. So you want to look at the top 10 holdings. And in my case, because I invest in technology funds, the majority of the top 10 holdings tend to be the big technology corporations. So in this case, it's Nvidia, Microsoft, Amazon, Apple. And actually, what that does is because these are large corporations, it actually lowers the risk. Like the gains won't be as high, but the risk is lowered because you're spreading out your risk across several companies. So if one goes down tremendously, it's not going to affect the portfolio as much as holding an individual stock. So I would tend to look at the top 10 holdings and research these companies and see if I'm comfortable with having a position in these companies. So having research of the top 10 holdings is really important. And in my case, they tend to be technology companies in the top 10 holdings. What's that? So as you can see, I'm invested in a lot of different mutual funds with my risk spread out across my entire portfolio. So I also tend to pick a variety of mutual funds for the case that I want to, again, lower my risk. I don't want to put all my eggs in one basket with one mutual fund. So I pick a variety of mutual funds. And it does take a bit of time to research, but once you do research, you can, essentially, lower your risk and suit your taste in terms of investing that way. So, in terms of why I like mutual funds in general compared to stocks, is because essentially, to me, is almost passive investing. You don't really need to think too much. You tend to look at the general trends, the slice of the pie, what are the majority holdings for, and so you do need to do research, but in terms of passive investing, it's a really good choice, I think. And there's also less stress involved because you're no longer picking individual stocks or individual companies. And so your risk is lowered far greater. So you're no longer stressing about, how they're performing in Q1, what's their annual report like? Is it going to decrease the stock by 30%, etc.? And you no longer have to think about this since your risk is far, far lower because you're investing in mutual funds. The portfolio stocks is going to hedge your risk against, say, black swan cases where a stock kind of drops like 50%. You don't have to really worry about that too much. So in terms of stocks as well, the reason why I prefer mutual funds over stocks as well, because you're not only lowering your risk to losing money, as Warren Buffett says, one of his main rules is don't lose money. And so not losing money is important, but also not losing time is also important. So when I was investing in individual stocks, I found I was just constantly looking at the charts and kind of stressing out, particularly when the stock was going down quite a lot. And so, I was constantly stressing out, looking at the charts constantly. And now because my portfolio is is quite large, and my kind of risk is lowered. I'm no longer constantly looking at the chart, seeing whether one day it's going to drop down 20% or increase by 20%. You're kind of going through that obsessive nature where you're constantly looking at the charts and looking at stocks constantly for kind of immediate feedback how your portfolio is doing. So mutual funds is also the long game as well. So you're not gonna win massive over a short period of time. It's kind of a steady eddy. So you kind of say every month, maybe you chip in a little bit of money towards a particular mutual fund, etc., and it kind of builds over time. So yeah, so in the UK, we're quite lucky to have a stocks and shares ISA. So I believe there's like a 20 grand allowance each year. So you can choose to fill up that 20 grand however you want. But it's, for me, I've been doing monthly chipping in terms of towards the stocks and shares ISA. So gradually investing in mutual funds, and obviously it's going to gradually increase over time. And yeah, it's going to pay great dividends in the future, hopefully, once you rack up those years and months of investing. So yeah, so that's my experience and journey in terms of investing, and my tips, and hope you found it useful, and hope you enjoyed watching this video. Thank you very much. Hello everyone.